Hello and welcome. Today is the completion of the first day of January 2020. My name is Derek. Welcome to the Money Chart channel and Happy New Year, Happy New Decade. And I even hear people talk about, no, this isn't the end of the decade. At the end of this year, it would be. Really? Okay. And that's because year 1 is the first one and year 10 is the last. Well, your first birthday is after you've completed 1 year. So, year 0, which is what we're in now, like 20. Well, once we finish the first year, we'll be in 2021. All right, that's enough about that part. All bets, trades of the like, that's within each's own risk, their own reward. This is just primarily on gold. And we'll take a look at all the time frames. It's going down to, I don't know, I might even go 15 minutes, but definitely all the way down the hourly. And for myself, gold, silver are the two investments that I think myself as the only safe ones within the long-term time frame. Okay, so getting that part out of the view, the bullion, the actual physical metal, only way I want to have in any action within the gold game, I'll call it. Several years this market went up. This is the yearly chart. Each candle represents a year. And in the year, let's see if, there we go. 2001, 2000, just whatever, this year here, 1.97%. We have a 29% here. There was a 31. Oh yeah, then there was this here at 136%. A month before that, or a year before that, it was 37. Year before that, it was 23. The year we just had in 2019 up 19%. But as it's playing out within this 18, after those several months in a row that were up, 3 down years, which came down to the 18, and then 2 small up ones, but just staying within it. Previous year, 2018, technically down, but only 2.2%. And this one, really not the greatest of gains overall at 18, but it is an attempt of the excitation of the 18. And the setups that I'm looking at for all these time frames are going to look very, very bullish. So the yearly chart most certainly does. Let's look at the quarterly next. And we're looking at the same data points from the same period, which was, and interesting, they don't got all the data from here, but gold is always illegal to buy from 1933-ish, around that time frame. And they basically said, oh, hand your gold in. And then after they took their gold for like $20 an ounce, up $35 an ounce for gold. And they pegged it at that for a long time. And then the London gold pool in 1968, things started trading. It was $35 way back then. It rose all the way up to some sort of key level. And then gold was legal. It just dropped like this. So once it was legal, this is what happened. And then consecutive years up, just like this. And on this high, of course, 850, 860, this says. And the correctionary phase was most certainly a long one. This one here hasn't been as long, but it does look to me as if it might be over. For from this high, we have this red candle. This is where this downward all starts in here. As for up to this point in here, the price action was just amazingly staying above this point. But then we have this down move, which didn't have any major rallies. It actually continued to grind its way lower like this and staying below the 18 average of lows. And then the 2-month rally in here, or 2-quarter rally rather, getting up to the 18 highs was a productive one because it ended up neutralizing the downtrend. After, say, several quarters resisting it and barely making lower lows, now continuing with microscopic volatility, it stayed within this and never broke support, never really broke resistance. And when it did get above it, it never really did anything else. But now a little bit different here over the last little bit, as it's managing to break out above it very, very nicely. There's this candle in here, which was quarter number 2 this year. It followed through with a little bit of higher high extension. And then this was the period here that we're going to see. Like, if you've been watching my videos or seeing, you know what gold is like. It hasn't corrected much through price. And we have, just like silver does, an inside quarter. That's when we have a lower high from the previous one, because the quarter 3 got up to 15 2/3. But this one here only got to 15.29. And the low, the previous quarter, was 13.85, we'll round it to, and this low was 14.46. Significantly higher as well. But what it tells you is that it was holding this, and this statement, the story that I'm getting from this, because it's the breakout after all of this sideways consolidation it had, where it had a good set of resistance, good set of support. Second resistance set, second support test. The third resistance set obviously didn't do what the previous one did, and that's just resist there and go lower. This one resisted it, but only might have went down to here, broke that level, and it's been, of course, a phenomenal run ever since. And therefore, with this breakout, and you have a situation where it supports it barely filling much of the space at all. The only price correction was this move and this grind moves, those 2 bits lower. Overall, hardly anything in comparison to the start of the millennium lows at around 250, 260. And when you have a situation where you have a phenomenal rally and then you just have a phenomenal retracement as far as it doesn't give that much back in price, therefore when it breaks above the 18 highs, it's not that far away, which is obviously the case. I wouldn't be surprised if it doesn't resist this well, meaning maybe it stays there, congests for a while. Maybe it just pulls back to like 1500 and that's it, or something in that area, a little lower, like 14, even 13 and a quarter. But that's still not that big compared to what the potential these moves happen to have. 5, 6, 7, 8, 10, 20, 30,000 is, to me, realistic levels for gold can make prices in an okay period of time, or possibly, and maybe even probably within the decade. Crossing over to the monthly chart from the high now, there's the attempt to revert the trend, which it has done. For stage 1, band flatten out. Stage 2, establish resistance. Stage 3, come back to the band, and well, stage 4, break resistance. Didn't do it here, but it successfully held. It didn't break this support, matching a pierce above. Attempting to break this resistance here again, nope. But amazing correctionary move. Attempting to break it here, yep. So therefore, this market got bullish in August. Let's see how we go rolling in a very new bull market. So the probability odds, when I look at this, tells me it's probably going to be making a nice move up towards that high. Let's now take a look at the weekly chart. And this gives me more bullish signs from the rally in here in May. Comes up to this high, retracement down to this low, and this little move in here after just a small grind and a pause to the final bit in here. What an interesting week ending December 16. But nice little gain in here ending this. And this week is, well, December 30th. It's the completion of this week. So it's like pausing this. That's a very beautiful situation. Same story as I just mentioned. Point low, big move. Very good correctionary phase, meaning not filling much empty space, leaving the 18 not far from this high, probably not going to see much resistance. And again, that means maybe it comes down back to here. That's the best you get. And the probability odds of having a good gain in volatility or X move is pretty good on a break of that level of resistance, daily time frame. And we're looking at that last high that we had near the late part of our summer in the Northern Hemisphere. And all the lower lows that have occurred from that point. We have this low, which technically was lower to this. And then a lower one again. It managed to hold this for a while, but ultimately didn't succeed on a bullish level. Or it succeeded on a bearish level for, well, one leg lower. And this was it right here. And then here we have the correctionary phase from here. So there's an interesting spot within these candles here. because this is the breakdown point on a bearish level, leaving the 18 exitation on a bearish front. Now, that didn't happen. And look at the opposite move that occurred. So always adjusting to the message of the market. So you could be able to say on November 25th, this thing is bearish. We're going to go down. We're probably going to test some areas down towards here. Oh, okay, yada, yada, yada type of stuff. And then you get up to this point where you still got the declining average. But when you look at this even further, let's look at these candles in here. So you have this green up month, or day rather, and it comes up to this point, still lower to this high. And the 18 has just, I mean, that's a flattening. That's a flattener, if you will. Okay, the downtrend has been neutralized. But this period told you it had a price correction down, but it got majority, if not all of its intraday losses back. Well, it just neutralized the market the day before. And then the next day, I mean, we were saying back in here maybe how bearish it was. Now on this day, when you're adjusting to the message of the market, oh, this is exitation of attempt to get out of the 18. And it established resistance. There is this big comeback. Okay, either this is a failed breakout or it's a real move. We can see it was real. But if you get failure and you see weakness on the 18 lows, that will tell you it's a failed move. And there was no sign of that at all. Not even close. So it retested this level. But again, it comes down and correctly supports the 18 and several days in here where it was showing strength after all of this stuff I've just talked about here was in play. So to say that what we've just had is a surprise, discounting and not even knowing or caring about what the Christmas and end of the year season's all about, it was not a surprise. It was to be expected. And you break a key level of resistance, you have a significant key move. And it did just that. So now let's take a look at some Fibonacci. Let's put a high in here. We got the high around 1563 and this low in here. So we take high divided by low to the exponent, the numbers I like, 38.2% and 61.8. The first Fibonacci level, 38.2% from this high and this low, comes in at 1491. Which it needed to get above to really another way of saying the downtrend ended, which was the case on Christmas Eve. Now, the fact that this high on December the 4th was 1489.9, which was a microscopic pierce lower and really was within $1, an exact hit. Well, it was just luck. And on this day here, 1491.6, we'll call that an exact hit. It was just luck. 61.8% from this high to the low below there. Well, it comes in at $1,519. And right now we're above it barely. We're piercing above it now. It's pierced noticeably a bit more. So how much resistance have we found? We can see there's been resistance here. Not much, but there's been resistance. And it's I really don't need to, I mean I will, but I don't need to shorten out the time frame to tell me what the story is. I can see it perfectly here. On December the 26th, it was close. You would have been like, man, that was odd. How did we end the day closing at 1514 and have a high of 1517? We pierce these things extra. Like, I mean, I know maybe, I mean, here I guess it's the same thing as that, maybe, but it didn't pierce. Oh, the next day it did, of course. But it didn't go up any further. Well, certainly that was the area of the high for the day. And the next day, that was the high. It closed at that number, 1518.6. And that was the high of the day. The high was 15.9. So there was a 2-day period here where when the day before it pretty much came close to it, it was its resistance. But what happened on New Year's Eve? Clear cut break. And so far in today's session, it's 10:14 p.m. as I'm doing this. So a few hours in, it is holding and staying above this key point. When you see stuff like this, you're like, okay, adjusting to the message of the market. This is becoming very live for a very soon breakout, like today, tomorrow, next day kind of deal. And it could be also be congesting at this area, as I say, areas where I don't think there's much resistance. Well, one of the methods of it could be a simple situation of, I didn't mean to do that. We'll just put it there. That's what I wanted to do. An area of congesting would be something like doing like this for a while. And maybe it does that with the 18 catching up to it over later at the end of the month or later in the month, something like that as a possibility. Let's take a look at this on the hourly time frame. And I'm going to start off with a lot of periods just to go show some of the story in here. So in viewing the Fibonacci, and just for curiosity's sake, the 23.6% level, I mean, yeah, it was in that area. It was about 1474. Well, my calculator tells me it's at 1474 rounded. So most certainly you come from the 23.6. Okay, next stage is if you can get above this, clear above this resistance, which this spot was what you would expect it to be. And then you resist it once, you resist it again, and for several periods, decent pullback, but barely, but making a higher low. Getting above it here and piercing below, as I mentioned before, barely below, but still pretty much hit wild, pierced below Fibonacci here. But it held and stayed above that line, and it did so on a vicious attempt. Because when I talk about holding and staying above, it's okay to have what usually is a not too large of a down move. I guess this one was large, but definitely not too large. And okay, so now you establish support, 1463. Just don't break it. And it didn't break it. So then it got above it here on December the 11th. And it did manage to, well, we'll call it hitting it perfectly here. It was luck that it hit it perfectly. And then we have support and this consolidation in the middle of these fib points. And the excitation of such occurring on December the 22nd here, we can see finally getting off of this sideways range. And we still haven't had anything up until really now to really destroy this trend. Not destroy, but revert this trend. And even now it's just starting to attempt to revert it more than anything. We'll get to that in a few bit. But so there we break resistance. Okay, usually when you do a concise move to next level. Yeah, exactly what took place. It's just wild how it does this. The lines you drew in as after it was making its bottom, because you're connecting, and I don't even have all the data here, but that key high and the key low, the numbers of course being 1446 and 1566, 76.4, 1537. If we get by above that resistance, don't be surprised if that happens to be a key level. But the excitation here on the December the 30th at 8 p.m. Eastern Time. Very beautiful move, establishing this level of resistance. We'll call it coming, I mean, technically it did come back to where it came from, because this high is 1520, we'll say, rounded. And this low rounded would be 1519. It pierced above this line. However, from this bottom, we had this quick, sharp rally back to into this area. So the fact that it wasn't able to continue to move higher was enough to neutralize it, but then that changed. After this red candle, we followed through with 3 in a row, enough to start to make this into a declining session. Interesting period here on the open, as the price action had a gain and then rejected it immediately. But after rejecting it, it's been in a nice uptrend, continuous green candles up. Enough to neutralize what's a newly declining situation here. It's got to get above 15 and a quarter, 1520. In the 15, this is short-term analysis, of course, but 15 and a quarter and change. It looks like a clear breakout. We are ready to go to, of course, that 1537-ish, I think, level that it happened to be. Oh, I'm normally not that good at memorizing numbers, because I'm bad at that. So I'm surprised I got that right. And I think I was right. That's why I checked it there. And that's what the type of message I would be getting on with it. But since from this low here, it's had a decent 4 or 5 period in a row up to this high. If it makes a move up here and it starts to falter within the 18 lows priced in at 1521.5, we'll even say 1521 even. If you see weakness at that number, and really for that matter, it's 1521 short term, then that would be telling you that this is a failed breakout. And well, we'd have to fill some of this empty space. Either failed breakout, we'll falter here with the 18 and it's most likely going to come down and fill some, or it's not, it's a real move. That means it's going to success correctly. Any type of big selling below will definitely be a failed breakdown if it's a successful move. And again, it'll break this resistance, go to 1537. And as I've been seeing everything and showing on the other time frames, this thing looks so poised on so many levels to break out. I think 2020 is going to be a fabulous year for gold. The charts at least state that the probability on the quarterly for the next 4 months, the yearly for the next monthly, the next 12 months kind of deal, to be very positive. So we'll see what happens. I mean, everything's going to happen as it will, but for years, like 2015, 16, 17, all that time, I said, I mean, this is boring. Not much is going on. It's got God break above this, which was like, well, let me just bring it back to say the weekly chart. And we'll go back to all this stuff. See, back in here at this point, well, at least in here, you were just in a downtrend over and over and over again. An attempt to break out here in 2015, no, nothing's going on like that. And still declining. Okay, here we go. This is it. The attempt to do it here in 2016. We've gotten this high, new one. Now we just got to make sure we hold this move. But okay, that's about the support you want. And at least we've established this level of resistance. And okay, here we go again. Nice little upward trend. And no, so it was just one of those wait and see. And at the stage here in 2017, 18, yep, no conviction. Back in 2016, it could happen soon. Never did. And now the setup looks like it will. And this is the first time, to me, that gold has really looked this bullish over a good period of time. This is going back since this, look in here, this looks better than the run in here. And this is the best one it had before, which was the run around 2016. All the higher lows we're having. So to me, it just seems obvious. We'll see what happens. Thank you for tuning in. Have yourself a great year, great day. Bye-bye.